Good day everyone, and welcome to our webinar for April 2024. Just a couple of housekeeping things that you may not be aware of. If you are interested in following what I say on Twitter, which is now called X, you must just look in the description down below. You'll find a link to my Twitter feed, and I tweet every couple of weeks. I don't tweet every day, it's just whenever I think there's something important. And the other thing is that if you want to see the winning shares list, it is available in the PDSnet data center, which is the program you use to download your share friend. So if you look there, you'll find the winning shares list. So if you're not quite sure where to go, or you don't have access to the website, then that is another way you can find it. Okay, let's begin in America as we usually do. The S&P 500 has ended the quarter on a new record high, as you see here on your chart. So it ended at a record of 5254.35, and in fact in the first quarter it gained 10.2%, which is the strongest first quarter of growth for the S&P in the last 5 years. The gains were led by Nvidia, which is of course the AI company, which was up 82.5% in the quarter and 14.2% just in March alone. Tesla, by the way, fell 29% in the quarter, mainly because of low demand and pressure from Chinese electric vehicles. Now the chart that's on your screen shows a very strong upward trend, starting from the cycle low down here on the 27th of October last year, which was at 4117, and going right all the way up here to this latest record high. So a very strong upward trend. And after some backing and filling here, it's obviously, this is the backing and filling which you see here. It broke up through this previous record high at 4796, and has been racing ahead since then. We are now on this peak here. We were on a price earnings ratio of 28.52, which is pretty high for the S&P, but by no means the highest level that it's reached. It's still below the peak PE of 35.96, which was actually recorded on the 21st of January 2021, before COVID-19 began. We believe that it can still rise from the current level. Our calculations, in fact, indicate that it may reach as high as 6458 sometime in the next 2 years. However, you should be aware that we have been telling everyone for a while that it's due for a correction. So we'll talk more about that in due course. Just looking at the American economy, the consumer price index was up 0.4% month on month in February, but higher than expected. Core inflation was also up 0.4% for the month and 3.2% over the year. It's proved kind of sticky and resistant to the higher level of interest rates. Obviously, the Federal Reserve Bank's objective is to bring it down to 2%. But at their meeting on the 20th of March, they kept interest rates unchanged. And they are now expected, they actually predict that they will reduce rates by 325 basis points moves later on this year, so before the end of the year. Wall Street, of course, has taken heart from this and is expecting the first rate cut on the 11th of June. However, that expectation is starting to be questioned now. Of course, that assumes that rates will remain unchanged at the meeting on the 1st of May, which is coming up. So that's something to bear in mind. On Good Friday, the markets were closed, of course, and the personal consumption expenditure inflation rate was reported on that day at 2.8% year on year. And it was up 0.3% on the month, and that's exactly in line with economists' expectations. So it didn't have a big impact on the market. The PCE, or personal consumption expenditure, is the Federal Reserve Bank's preferred measure of inflation. and that is where the target is to reduce it to 2%. So it's getting there. Consumer spending rose by 0.8%, well ahead of predictions of 0.5%, and personal income was up 0.3%, just slightly less than expected. A major impact on the inflation rate is the price of oil, and that has been rising since the start of 2024. I'll just go to that chart so that you can see it. Okay, I'm just going to put a bit more data on the screen here. Maybe 5 years, and expand that a little bit. So you just get a bit better picture of what's going on right now. I've made some annotations on here. Obviously, you can see the Russian invasion of Ukraine over here in March 2022, and then, of course, Biden's visit to Saudi Arabia, which occurred in about June of 2022. And then the oil price fell after that meeting in Saudi Arabia, and it seems to have reached a very firm support level here at about $72. And then this year it's been rising off that base. So it's been moving up, and it's now at $88.29. That's where it closed yesterday. So that's quite a substantial move. This upward trend is basically bad because it's bad for US inflation. It's obviously bad for Biden's re-election campaign, and it gives Russia more money to fight the war with Ukraine. So it's not a great trend that we're seeing there. Okay, so now in 2024, prices seem to be rising, and that is, of course, going to have an impact on inflation, not only in America, but also here in South Africa. If we look at what's going on in Europe, and specifically in Ukraine, of course, we had the farcical re-election of Vladimir Putin for a further 6 years as the leader of Russia. Thousands of Russians protested at polling stations and across the country. There was no independent verification of the results. And Putin's most serious opponent, of course, Alexei Navalny, had been murdered in an Arctic prison just before. Clearly, Putin cannot be removed from office by democratic processes. That's pretty obvious. We believe that he will eventually be killed, probably by one of his own inner circle. The ISIS attack on the concert hall near Moscow saw 139 people died and 180 injured. This is seen as a major failure in Russian intelligence because it was completely unanticipated. It undermines Putin's image as the strong man who can protect Russians. And that is also undermined by the incursions and fighting by Russian rebels in the cities of Belgorod and Kursk. This has forced Russia to divert some of its troops away from Ukraine to contain the situation. Added to that, Ukraine's drone attacks on 15 different Russian oil refineries deep inside Russia have also had a major impact. They are thought to have cut Russian production by as much as 14%, and that of course hurts Russian revenue and makes it more difficult for their economy. But now President Zelensky has told the US Congress that they will lose more territory if they do not get the support package from America. Because of the US Congress's failure to approve the $61 billion aid package, they've lost the city of Avdiivka because the Ukrainian army simply did not have enough ammunition. It's possible that the Speaker of the House, Mike Johnson, who's obviously a dyed-in-the-wool Republican, could make a compromise with the Democrats to bring the aid package to the floor for a vote. If he does, then it's possible that the Democrats may support him to continue as Speaker. But of course that will turn him against the MAGA Republicans, who would probably never forgive him. In our view, the situation in Europe is at a critical point. We believe that in the unthinkable event that Ukraine would lose the war, then a war between Russia and NATO is more or less inevitable. It's just a matter of time. However, if Ukraine gets sufficient support and even gets NATO troops on the ground in Ukraine, then it could easily capture Crimea. And the loss of Crimea would probably spell Putin's doom. Putin is close to the point where he commits Russia to perpetual war. This is an interesting idea, where a country is committed to be at war indefinitely, similar to what Hitler thought in World War II, and obviously was originally proposed by Trotsky in the 1918 Russian Revolution. Putin has shifted the Russian economy completely onto a war footing now, and is conducting repeated conscriptions for more troops. NATO, on the other hand, has increased the production of military materials, but it is nowhere near Russian production levels yet. There is talk of committing troops, specifically by France, and now supported also by the Swedish Prime Minister. But NATO has not committed itself to the need to win this war, and I think that is a major problem. They need to commit to defeat Putin once and for all. That lack of commitment and the possibility that Trump may be re-elected in November is what gives Putin hope. All right, let's turn our attention now to South Africa. President Ramaphosa has been given authority by the National Executive Committee to decide who is kept on the ANC lists. Many on the list were accused of state capture in the Zondo Commission report, and the question is, do they stay on the lists? Some of the names there are people, high-level ANC people like Gwede Mantashe, Zwelem Mkhize, Malusi Gigaba, and David Mahlobo, and others. If they're kept on the list, then the ANC's step-aside rule is really a joke. Ramaphosa is facing much criticism for being too lenient on ANC corruption. Of course, the allegations against the speaker, the ANC's speaker in the House, Nosiviwe Mapisa Nqakula, who is accused of taking bribes, comes at a very bad time for the ANC. There's a state witness, a person who's turned state's evidence and produced much written evidence which shows that she took many bribes, amounting to millions of rands. And basically this is further evidence that the ANC cannot control corruption amongst its members. The latest polls by Brenthurst show that the ANC's support has now fallen to 39%, and they have the EFF at 10%, with the DA coalition at 33%, and Mkhonto Wesizwe with Zuma at 13%. This shows that the ANC will be forced into some kind of an alliance in order to retain power. Most polls are showing that they will get less than 40% of the vote. Notably, the Minister of Finance announced a 20 Rand increase to the social grant, the SRD grant, and that's going to cost the fiscus an extra 180 million Rand a month, which is about 2.16 billion a year. And this is obviously a very thinly disguised election ploy to garner more votes. The water crisis in Joburg and Durban is becoming a major election issue. Parts of both cities recently had bad water outages. Water shedding is becoming similar to load shedding. The water system is dilapidated and falling to pieces in most cities. Crisis management with no proper planned maintenance has been the hallmark of the ANC's administration. The quality of water is also poor, with 46% deemed unsafe to drink. So this is becoming a major issue and could continue to be a major issue as the election draws nearer. Okay, let's look at the economy. The Monetary Policy Committee kept interest rates unchanged at its March meeting. It said that rates will probably remain higher for longer than expected. Headline inflation is only expected to fall below 4.5%, which of course is the midway of the target range, by the end of 2025. And rates are expected to begin falling in November, And our Monetary Policy Committee, like the American MPC, is talking about rate cuts before the end of the year, but we are only talking about 2, not 3. Retail sales fell by 2.1% in January, year on year. Consumers are obviously taking much strain in January month. That is considerably down from December's upwardly revised 3.2% growth in retail sales. Obviously, Christmas sales were relatively good. Consumers spent too much, and then obviously they didn't have enough money left for January month. ABSA's results for 2023 show that its credit loss ratio climbed to 1.18% from 0.96%. That's quite a big jump. And that also shows that consumers are taking strain with high interest rates. Standard & Poor's says that the banking sector will face debt defaults of around 74 billion rand altogether. Interest rates should begin falling in July, provided the US leads the way. The price of fuel has also been rising in line with the oil price. Business confidence was down in the fourth quarter, showing the tough conditions. Construction particularly is taking strain. Building plans were down 6% in the fourth quarter of last year. 70% of the people in that industry said that they were unhappy with conditions in the industry. Of course, the construction sector employs thousands of unskilled and semi-skilled people, so that is having an impact on unemployment. And talking about unemployment, 194,000 jobs were lost in the formal sector in the fourth quarter. Most of the lost jobs were part-time and in the mining sector. GDP was up by just 0.1% in the fourth quarter of last year, and mining production fell 3.3% year on year and 0.8% on the month of March. Sorry, that's 3.3% in January 24 and 0.8% on the month of January. Manufacturing production in that month was up 2.6% year on year, despite a fall in the Purchasing Managers Index. Drought conditions will result in much smaller crop sizes this year. Fortunately, we have a bit of a maize surplus from last year's bumper crop, but maize prices are already moving up, with white maize up 25% already. Obviously, the price of maize has a significant impact on food inflation. It also impacts the drought conditions have impacted on thousands of subsistence farmers who grow a few acres of maize in order to survive. We just avoided a recession in the third quarter and the fourth quarter, because the third quarter was minus 0.2% and the fourth quarter was plus 0.1%. So we came within a whisker of being in a technical recession. For the whole of 2023, GDP growth was only 0.6%, well below 2022's 1.9%. High interest rates and obviously falling commodity prices are taking a heavy toll. Growth in 2024 is only expected to be 1%. And that's obviously far too little to absorb the enormous number of school leavers who will join the labour force in 2024. The low growth is not going to help the ANC in the elections. We see that the current account fell to a massive deficit of 155.5 billion in the fourth quarter of 2023. For the whole year, the deficit was 1.6% of GDP, and that is considerably more than 2022's 0.5%. The problem, clearly, fall in commodity prices. And this, you should compare, obviously, this figure to the 2021 figure when we had a surplus on the current account, excuse me, of 3.7%. All right, a few general points that I'd like to make. Government departments now owe 22 billion rand to the municipalities for various services. And they also owe Eskom and the water boards. The municipalities also owe Eskom and the water boards. All this debt should have been settled in 30 days in terms of the Public Finance Act. So the figures show the extent of financial mismanagement in the government. At the end of 2023, 17.8% of senior staff in the government could not prove that they had the required qualifications to perform their jobs. This is a result of the ANC's policy of cadre deployment, and it has caused enormous impact on service delivery. So service delivery has been very poor for many years. The Treasury report on municipalities shows a massive degree of mismanagement. These municipalities only managed to collect just over half of what they had budgeted in rates and other fees, and collectively they are owed about 104 billion in rates, which they do not seem to be able to collect. There's a general lack of service delivery right across the country. President Ramaphosa has reappointed Kanyago and his team for a further 5 years as governor of the Reserve Bank. This means that if there's a new government coming into office after the May elections this year, they will be tied into Kanyago as governor of the Reserve Bank until 2029. This is a very good move, I must tell you. The Reserve Bank, in fact, and the management of the Reserve Bank has generally been the ANC's standout achievement for the last 30 years in office. With this move, Ramaphosa has ensured a good measure of stability, and it's been widely welcomed in the business community. Okay, the cement industry is losing ground to cheap imports from Vietnam. Imports of cement rose by 43% in the last 6 months of 2023. And of course, this is surprising because the Vietnamese have to manufacture the cement and then get it delivered here. They have to pay for the transportation to South Africa. And cement is a low-value, high-bulk product. So this tends to indicate that our cement industry is simply not efficient or not competitive enough. The industry says that the imported cement is of poor quality, but of course it still sells. So they need to do something about that. Right, final general point. There's much evidence now that the world is making progress towards renewable energy. In 2023, 540 gigabytes of renewable energy was built, mostly wind and solar. And this is 75% more than was built in 2022. So there's a massive increase in renewable energy worldwide. Electric car sales were up 35% on 2022, so there are now 14 million electric vehicles sold last year. So that's improvement. In the first world countries, emissions dropped to a 50-year low. The EU was down 9%, the US down 4%. China's emissions were up 5%, and India's were up by 4%. So the emerging markets are where emissions are climbing at the moment. South Africa's emissions fell by 0.8%, but that's mainly due to Eskom's inefficiency and its load shedding. A UCT report shows that climate change will have a serious impact on South Africa. It will mostly impact the poorest people in the country, and mainly because of an increase in floods and droughts. Crop failures and a reduction in tourism will have a direct effect on the poorest people in this country. Many rural families will be forced into poverty, and some of them will turn to crime. Okay, let's look at the rand now quickly. Now that I've dealt with those general points. Where are we here? Lost my way a bit here. There we go. Right, so this is the chart of the rand. I'm just going to put a bit more data on the screen here. It's a bit too much maybe. Okay, so now this is the chart. We showed you this chart of the rand in last month's confidential report, and we pointed out that there was this triangle developing. We said that the general trend in the rand was that it was weakening, but that at the moment there was a triangle developing. This is where the confidential report was given to you last month, and you can see that since then the rand has strengthened to touch the lower trend line, and then weakened to sort of midpoint here, and it's now strengthening again. So that's where we are with the rand. A triangle is an interesting technical phenomenon on the charts, and what it really shows is diminishing uncertainty. So you can see at this point there was a high degree of uncertainty, so the rand was volatile. It went all the way up, down here, all the way back here, and then all the way up, and you can see that with each fluctuation it's getting the fluctuations are getting smaller, and that shows that there is diminishing uncertainty about the future direction. Eventually, of course, the triangle is broken either on the downside or the upside, whichever way. In our opinion, the rand will break on the downside, and we expect the rand to move to around $20 to the 20 rand to the US dollar in the relatively near future. It's basically only being held below 20 rand to the US dollar by the strong US sentiment, the risk-on sentiment, which is coming out of the fact that international equity markets are moving up at going to record highs. But we do not expect that sentiment to last much longer. So we're expecting international investment community to shift towards risk off. And when they do that, emerging markets and emerging market currencies will take a bit of a hit, including the rand. So we're expecting the rand to weaken from its current position. All right, in last month we also we talked about the dollar price of gold. So let's go there now. And here you can see this is the chart that we showed you of the gold price. It's basically a 5-year chart. Here you can see COVID-19, okay, and there's the Ukraine war beginning in March of 2022. And now you can see that what has happened, in the last month's report, when we did the confidential report, we drew your attention to the fact that gold was on the cusp of breaking up through this long-term resistance level at $2,060 an ounce. Well, you can see what's happened since then. It's gone up very, very strongly, including last night's figure, which took it up to very high levels. So it's broken up through that resistance, and it's trading at now well above 2,280. It's risen 10.8% since it broke up through that resistance level. And that is normal. That is normal behavior for an upside break through a resistance level. The upward move is, of course, resulting from various different factors, but mainly the deteriorating situation in Ukraine as a result of the lack of US support, concern amongst investors, international investors, that equities are overpriced, and of course the general difficulty which central banks are having throughout the world in getting inflation under control, and the need to keep interest rates high for longer. In fact, there's a general belief amongst international investors that paper assets like currencies, equities, bonds, and so forth are perhaps a little overpriced, and that there's a danger of political risk because of the various wars around the world. And here I'm thinking of Gaza, Ukraine, what is going on with the Houthis, that kind of thing. So the smart money is moving some of its cash into gold. Why? Because gold is a safe haven. For the last 5,000 years, the purchasing power of gold has virtually not changed. So it's the ultimate safe haven currency. But of course, it doesn't give you any return. So you don't get any rent or interest or dividends from gold. It doesn't add 10% to its weight every year. But it does protect the value of your wealth. And that is very, very important. So, I mean, if we look at gold in rands, the position is even more dramatic. So now what I'm going to do here, I'm going to show you a long-term chart of the rand gold price. There it is there. You can see that here, back in August of 1992, gold was trading for less than 1,000 rand an ounce. Last night, over here, it closed at about 42,000. I just want to zoom that out so that I can get the exact number. Yeah, 42,396. That's where gold closed last night. So it's gone up from $1,000 in 1992 to over 42,000 over that period. So that shows you that it's a great protection against the weakness of the rand, and also against the fact that that paper assets generally worldwide are overvalued. So it is a mechanism for international investors to protect their wealth, and the break up in the gold price is very, very important. Okay, there you see it again, that the break up in the dollar price of gold. Okay, let's talk about companies now. First of all, just mention that African Bank is finally going to list on the stock exchange in 2025. They've made an announcement. They, of course, used to be called African Bank Investments Limited, or ABLE, and they are owned 50% by the Reserve Bank, 25% by the Government Employee Pension Fund, and 25% by a consortium of commercial banks. The IPO, they're expecting to come to the market with an initial an IPO, and that will raise some money. And they're doing an employee share option scheme so that their employees can benefit from the IPO when it happens in 2025. Okay, so we think that once that share is listed, it will be a good investment for private investors, but it will be just another bank, and there are many banks now in South Africa. Okay, now let's talk about some shares. I want to go to Quantum. This is a share that we put on the winning shares list a little while ago. Just zoom it out here a little bit. I've got the volume showing here. Now Quantum we put on the winning shares list here on the 4th of March 2024 at a price of 525. Okay, why did we do that? Because for a long time the share had been stuck in this range here. You can see it around 450 cents with very low volumes traded. In fact, the average amount of shares changing hands at that time was about 3,500 shares a day. And then suddenly, on these 2 days here, Thursday and Friday, the share traded much more in terms of volume. On Thursday it traded 17,900 shares, and on Friday 12,000 shares, for no apparently good reason. And so on Monday, which was the 4th of March, when the share price ticked up to 525 cents, and that was accompanied with 100,000 shares changing hands, we thought, okay, something's going on. We didn't know what was going on. Nobody knew what was going on. In fact, I can tell you right at the moment, we still don't really know what is going on. But clearly, somebody knows something about Quantum. Now, I must just tell you, Quantum is not the kind of share that we would normally advise people to invest in, because it's in the chicken business, and the chicken business is arguably the worst business in South Africa because it's plagued by stiff competition. I mean, during the good times, everyone thinks that they can grow chickens in their garage. There's a lot of dumping of chicken on the South African market by overseas producers. The industry normally, or businesses in this industry, have to invest heavily in capital, and they have large workforces of semi-skilled and unskilled employees, so they're subject to union action. And of course, they're very subject also to outbreaks of things like avian flu, which can knock the hell out of the industry. But in this particular case, there is something going on with Quantum. We don't know what it is, but it became obvious because of the high volumes and the rising share price, which you see here in the chart, right? So when you see something like that, it's usually a sign of insider trading. Somebody in the company knows something important. Usually a takeover, that's the normal thing. Somebody's going to make an offer for the shares. And if you go through the SENS messages, you'll see that there's been a lot of talk about large chunks of shares being bought and sold and so forth. But what's important to me is this volume. The big volumes over here, and the rising price, you see, that is a classic sign of the insiders picking up the shares. We call them the strong hands. So they are the strong hands. Why? Because they know what's going on, and they are buying up shares from the weak hands, who are the ignorant investors, who are happy to sell their shares because they have been seeing the share at 450 cents for months and months and months, and now suddenly somebody's offering them 525 cents, so they take it. Now the share is up here at about 13 Rand. So it's gone from 525 to 1300 cents in a very short space of time. Okay, so in 18 trading days, it went up by 150%, 157%. And had you spotted this, or maybe acted on the fact that the share was added to the winning shares list, you could have made a very nice capital gain there in a very short space of time. 157% in 18 trading days. So I just wanted to draw your attention to that and to just allow you to learn something from what has taken place here. Okay, the next share I want to look at is Mix Telematics. Now, Mix Telematics is a small vehicle tracking company. It's listed on the JSE and on the American NASDAQ. And it's been there listed on both those exchanges since 2007. But it's been too small to really attract much institutional interest. To overcome this problem of being too small, it's decided to do a reverse takeover. In other words, it's taken over a company called Powerfleet, which is also listed on the NASDAQ, by reversing into it. So on paper, Powerfleet bought Mix Telematics, but it bought it for its own shares in such a way that when the transaction was finished, the shareholders of Mix Telematics ended up with control of Powerfleet. So they got that listing on the NASDAQ. Obviously, the transaction benefited both companies because they are now both much bigger than they were, and the combined company is significant. The reverse takeover was announced on the Stock Exchange News Service on the 10th of October 2023. At the time, we didn't really pay much attention because we thought that although it would increase the size, it would still be small. Certainly much smaller than its main competitor, which is Karoo, which is also listed on the stock exchange here. But it became apparent that the enlarged company was attracting institutional investments. So after the takeover was announced here on the 10th of October, you can see the share reached a cycle low there at 380 cents on the 31st of October, and then it started to go up. We put it on the winning shares list here on the 28th of December because it was showing really good signs of growth. And now you can see it's up here. So at that point it was 590 cents. It's now trading for about 1100 cents. And that is because there are, like any takeover, the takeover has to be evaluated in terms of whether it brings any economies of scale and good cross-marketing opportunities. And this merger seems to be a very good merger, which will significantly enhance the business. So it's gone up, and this kind of growth shows that the institutions are in there big time. Okay, so that's that. All right, Harmony. Now, we have, of course, talked about the gold price and the rising dollar and rand price of gold, which is very important. The break up through that resistance at $2,060 an ounce. And that's being for reasons like political risk, as well as the perception that paper assets are vulnerable and overpriced. Now, we suggested that you capitalize on this share by buying Harmony. Now, Harmony was put onto the winning shares list over here on the 16th of November last year at 99.20. Now, Harmony is an interesting mine because it has always been really quite a marginal mine. In other words, the cost of extraction was always pretty close to the actual gold price. When you have a mine like that, which is considered marginal, small movements in the gold price can increase the profits dramatically or wipe them out. So if the gold price goes down a little bit, it can wipe out their profitability. If it goes up, it can double their profitability. So that tends to make the share price quite volatile. And the big institutions don't really get involved in this because they are more interested in heavyweight gold shares where the cost of extraction is well below the current gold price. And of course where the mines have got a long life. Now, what was interesting about Harmony is that it bought Mponeng gold mine from Anglo. Now, Mponeng is the deepest gold mine in the world. It's the deepest mine in the world, actually. It goes down to about 5,000 meters below the surface. So, from the Highveld, they are mining well below sea level. So that will give you an idea. And at that level, at that depth, it's obviously very expensive to do the mining. There's a huge problem with heat. The rock temperature at that level is about 60 degrees Celsius. They have to pump thousands of tons of crushed ice down to that level in order to make it cool enough for people to work. But you must understand that gold in South Africa is part of an ancient seabed. It's alluvial gold, and it's an ancient seabed where the gold fell to the bottom of that seabed and became part of the reef, what we call the reef. If you look at a piece of reef, you can actually see small shells of ancient mollusks and sea creatures in the reef. That shows it was part of an ancient seabed. Of course, that seabed breaks the surface just south of Johannesburg, where the mining started, and it tips towards the south at an angle of about 20 degrees. And of course, gold being a very heavy metal, the deeper you go into that ocean, the further south you go, generally, the higher the grades. And Mponeng, being very deep, the deepest of all, has got exceptionally high grades. And suddenly, Harmony Gold Mine, who have been able to mine Mponeng successfully and profitably, have become, from being a marginal share, they have become a heavyweight. And that is very significant. So the shares moved up very strongly from 99 Rand 20 cents. They closed last night at 160 Rand. And that move has taken place in just, I think, about 4 months. Yeah, about 4 months. It's gone up 61.8% in 4 months since we put it on the winning shares list. Okay, the next share I want to talk about is Bell. Now, Bell is a manufacturer and distributor of heavyweight equipment, heavy equipment, which is mainly used for earth moving. So they sell to the mining industry, construction, agriculture, waste management, things like that. They produce a dump truck, which is exported worldwide from South Africa. They have a product range of 120 products, and 60% of their business comes from outside South Africa, which means that they are something of a rand hedge. In their financials for the year to the 31st of December 2023, they had revenue up 32% and headline earnings per share up 69%. So doing very well there. Net asset value climbed 21% to 55 Rand and 27 cents. And that is about 45% of their net asset value. They've got a very solid balance sheet with 250 million Rand in cash. And if you look at the chart, you can see there was a cycle low here. I just want to put a bit more data on the screen here. There's the cycle low that you can see on the 24th of March 2020, obviously impacted by COVID to some extent. Strong upward trend, put onto the winning shares list over here on the 27th of October at 1875. It's now trading for about 24 Rand 80. So it's gone up 33%. We see it as a bargain still. We think that there's more upside potential. All right, the last share that I want to talk about is Bolwin. We have mentioned Bolwin before. This share is in a strong downward trend, so you may wonder why I'm talking about it. But the reason is that Bolwin is a property developer, which means that they buy up land, they develop housing projects on that land, usually secure complexes, and then they sell off the units. And obviously selling the units means that they are vulnerable to the high level of interest rates and to the level of consumer spending. But at this level, where they are now, they are right down here. They closed yesterday at 173 cents. And this is a share which has got a net asset value of 824 cents. So they're trading at about a fifth of their net asset value. And remember, their net asset value consists mostly of properties. So to me, the share is hectically underpriced and certainly worth your attention. Anyway, I'm just drawing your attention to it, giving you an idea. Maybe it's at or close to its lowest point. We don't see how it can fall much further from these levels given its asset base. And the company is profitable, and we believe it's moving more and more into rental, so a larger proportion of its income will be in the form of annuity income, not so much from the sale of individual units. Okay, folks, that's about all I've got to tell you this month. Don't forget that you can find the winning shares list on the PDSnet data center if you're looking for it and you can't get onto the website. Also, don't forget that in the description below this video, you will find a link to my Twitter feed or X on X. So you'll see occasionally tweets from me there where I say what I'm thinking on a more sort of timiest basis than these monthly reports. Otherwise, I hope that you found something of value and interest in this report, and I'll talk to you again on the first Wednesday of next month.